Please, sir.
Okay, good. So, a warm welcome to all the participants to one more round of a inspiring speaker session of AIMS. And the topic today that we have is something which is very close to the heart of all of us, I think, importance of finance in our personal life. And for the session today, we have a very accomplished speaker with us. We have Ma'am Aravinda CA Aravinda Garikapati ma'am. She is a highly accomplished chartered accountant with expertise in international taxation and money laundering and sustainability reporting. As the founder of Aravinda and Associates Chartered Accountants, ma'am has guided numerous individuals and corporates on financial best practices and sustainability reporting. Her deep knowledge in finance, coupled with her certifications in ESG and BRSR, positions her as a leading expert on personal finance and sustainability. So, ma'am, with that, we get you in, and I will pass on the platform to you. But before I do that, to all the participants, let me just uh, put a few ground rules of the game. Participants will be kept on mute, and you will not be permitted to unmute yourself during the session. Whatever questions that you have in mind, please put in the Dropbox. At the end of the session, when we have the question answer round, we will take up the questions. And there will be a link for the feedback of the session, which will be provided in the chat box. Towards the end of the session, during the question answer session, please make sure that you provide your feedbacks. It is only then that the certificate of participation will be issued to you by the AIMS secretary. So with that, ma'am, we pass it on to you, and we look forward to learn from you today afternoon the importance of finance in our personal life and how we manage our life. Please, ma'am, it's up to
Thank you
you.
so much, sir, and thank you, Ames, for the opportunity. So, generally, what we think is the finance is the term which we come across and use it so loosely that we know everything about the finance. And unfortunately, you will know what you know about the finance and at the end of the day, today's session. Let's discuss in detail.
Right. Yeah.
Sorry. So, why is the personal finance required? Why do you think it is so required? It actually helps us as an individual. The session is restricted to the individuals is concerned, not to any organizations. Generally, the organization's finance will be taken care in a different manner. When it comes to the personal finance is concerned, we will be under the assumption that we are earning something and we will definitely have the buffer in place and we will ensure we will see when it comes. That is the general intention or the mindset of the people. Let's see when it comes. But that is not the case. We have to ensure that you plan your finances properly ahead of time, which can help you to meet any circumstances or any situations at the future. The personal finance practices help the individuals to capitalize on the strategic investment opportunities. So unless you have the op- investment plans and if there are any opportunities, maybe you are investing in any stock market or in fixed deposits or in purchase of the land or gold or whatever the name it is, unless you prioritize yourself, you will not be able to invest when the opportunity arises. You have to ensure that optimize the expenses. There is a concept called the reducing the expenses is indirectly the savings. Say example, suppose you are earning some 10,000 rupees per day. We should be more optimistic, right? That's why I'm mentioning 10,000 rupees per day. Okay, so if we take 10,000 rupees per day, and if your expenses are almost equal to 8,000 or 9,000 per day, then hardly you will end up receiving 2,000 rupees. In the other case, you are earning only 8,000 rupees, but your expenses are only 5,000 rupees. The margin there is 3,000 rupees. The person who is earning 10,000 rupees and end up with 2,000 rupees is comparatively less plan, less having less plan, and is not optimizing his expenses compared to the person who is earning the 8,000 rupees. You have to customize the budget not only for your organization, for your personal budget, for your household, for your personal expenses. Suppose say you want to plan your vacation, maybe in the next during the December month, during your Christmas holidays. So, what is the amount of expenditure you are expecting to incur it? What is the hotel cost? What is the flight cost? What is the accommodation, lodging, boarding, and all these things needs to be clear. Then, how do you plan it for the next 3-4 months? Will help you to decide your destination. Cultivate the financial knowledge, enabling the proactive decision making. That's what I mentioned you. Let the situation arises, then we will think of should not be the criteria for you. You have to decide yourself well in advance what you want to be. You can have your short-term goals, immediate goals, long-term goals, and the future goals. So, in the next 1 month, what is your goal which you want to do? So, what is the amount of savings you want to save by the end of the month? You should not check your bank statement, or you should not end up on 31st. When will the salary get hitted in your account? So, I believe that today most of the participants will be the students and the Gen Zs. Okay, so why do they require the personal finance concept more compared to the earlier year people or the elderly people? Because in the current scenario, all the jobs will be the gig jobs, and which you know it very well, and it does a very short term. It will be 6 months, 1 year, 2 years. Earlier used to be there where if you are going on assignment to abroad countries, there may be short term assignment or long term assignment. Unfortunately, the situation now, even in India also, there is no guarantee for the jobs, particularly to the software, and no exception to other sectors is concerned. There is no guarantee for the security unless it is a government job. And we can't expect everyone to get into the government jobs, and it is next to impossible for any government, irrespective of the parties, to provide employment opportunities. What are they giving with different names? It is a short term meet to meet the minimum basic expenditure. The diversification is one of the area once you need to do. So earlier used to the scale where if we learn something in the entire career, unless there is some few additions are there, the same knowledge is used to get the job opportunities. That is not the case nowadays. So if you are working on some particular technology in the current year, next year, leave about the next year. In the next month itself, it will get upgraded. Unless you get yourself upgraded with the new technology and the new method of using the same and implementing it, you will not be stayed back into the respective jobs. Technologies. AI is the word which is being the latest buzz used by everyone nowadays, stating that AI will take away the jobs. AI will definitely take away few jobs, but the human intelligence is much valued, and the experience counts a lot. Unless the data is properly been fed to the for the AI technology, you will not get the required output. Garbage in, garbage out. You used to read in the school days regarding the computer is concerned. What are you feed in? The respective output will only come. Unless you give the data adequately and properly, and the same, you cannot rely on the particular output. Global opportunities. Similarly, as it is currently every country is in the sorry, every country is running behind the other country, and it is open for all the global population across to get the best out of the available resources. The opportunities are also increased at the same way in the manner in which the resources are available across the world. So there is no guarantee that you stay in a particular location or in a particular organization throughout your career. So it is your responsibility to take care of your financial needs and other requirements, considering the some of the factors which we mentioned now. So what is financial planning as per you? It is the process of setting planning, achieving, and reviewing the one's personal requirements, personal goals. There is no hard and fast rule for the financial planning, because what your goal determines your financial planning and the need for the financial planning and the amount of financial planning involved. It's one way, it is a consistent lifestyle. Say example, suppose if you are receiving a salary or an amount of monthly income of say 1 lakh rupees per month. So your lifestyle will be determined based on that 1 lakh. What is the amount for the household expenses? What is the EMIs you pay? What is the savings you made? What is the insurance premiums you paid? All this will be determined by this. It is a consistently, you will ensure that the same amount is being utilized unless there is any variation in the income. The expenses will be determined, and your planning will also be based on the resources available to you. You cannot plan something which is not available in your hand. You cannot say, I might receive 2 lakh rupees from some X and I will spend 2 lakh rupees. You will end up paying unnecessary loans or something which will create a huge mess on your head. So you should be very careful when you plan something for your future and also for your expenses. So there is a concept of income minus savings is your expenses, not the income minus expenses is equal to savings. So your saving should be fixed, your income will be automatically fixed. So the balance only needs to be spent towards the expenses, not the other case. In such scenario only you will end up, will have the adequate savings for your, as a buffer for you. And you should have a better standard of living, as in the example given below, in the earlier of the 1 lakh amount. Unless you are accustomed to a particular lifestyle, you will not be able to handle your finances properly. And you have to prepare for the contingencies. There are cases which which you are reading across the newspapers nowadays. The pink slip or the termination letter is being given you in the Zoom call itself. After completing the Zoom call, you may get the termination letter saying that your services are no more required. That is the situation in the current market. In such situation, the EMIs, your monthly expenditure will not stop even if your job got terminated. So you should be prepared for the contingencies. To have the peace of mind, you should not check for the 31st for your account balance, so that your EMI will be paid without any hindrances and your credit score will not get affected. So to have the better planning in place, you should have the culture of adopting the savings from the day one itself. Once you start the earnings does not mean that you have to get the job or employment. Even if you have the pocket money or any stipend being given by the government or the college or something, income minus savings is equal to your expense. The income will be your stipend amount or your pocket money or your part-time employment amount received. Your saving should be your premiums, your other regular payments, not the EMIs. Please don't consider EMI as your savings. It is the payment made to you, the bankers. So what are the first step? So first, gather the financial data. What are the sources of funds available to you? What is the expenditure you are going to incur? Or whether you are planning to take any loan. So how do you plan to repay the loan? All these, the data needs to be captured. And you should appreciate that the data is the biggest asset nowadays for any organization over and above the money, because it will help you in making the decisions properly. Identify your goals. Set yourself what are your goals, the short term, long term, whether you want to pursue any further careers in any MS or something, or any post graduation or any PhD. So what are your goals? You want to start a new venture, identify it, and then plan what is the probable expenditure related to the same and what is the amount you already have in place. So the difference is the gap between the expenditure and the income. You have to ensure how you are going to fill that gap, through what means you are going to get that funds in place to make the goal reachable for you. Prepare the risk sheet. What is the possibility of non-payment of the same, and how do you think that the particular item will affect your life day to day or any other things. take the financial planner help if you require. If you feel that you are unable to take the decisions on your own, take the help of any financial planner who can help you in planning the same on your behalf in a professional basis. Don't take it on a personal basis, because if you ask someone and on a on a personal basis, he may give some free advice which may not be suitable to you. The planning and should be in a customized way and should be very specific to your requirement, and take the steps how do you want to implement the same, and visit at regular intervals whether the same has been in the right path or not. So say you are planning to save 1 lakh rupees in the next 4 months. After 1 month, check yourself, are you able to at least deposit or save 25,000 rupees per month, or even 20, at least 20,000 rupees, because the balance 5,000 you may save in the next month. So by the end of the third month itself, you should ensure the maximum amount is already in the savings, which can help you to implement the plan. Risk and reward. There is you all are aware that without risk there is no reward. The higher the risk, higher the reward. However, you should be cautious in taking the risk. Just because you are feeling that someone has got the reward or someone got benefited, you should not burn your hands by investing in somewhere which are fictitious or which has the false promises, like the chits or something, where they mention that not the chits I mean here is not the registered chits. It's the unregistered chits or unregistered loans or all things where the people will promise you, I will give you 30% return, which is not practically possible. So you should be very cautious when taking the risk, and the higher risk can be taken at the initial years of the life, personal life. The growing down the line, once you cross the 40, 45, 50, then automatically the taking capacity will be reduced, because if you lose something, the option of the capacity of regaining the same or earning the same will be reduced. So generally, if you see the people at the younger age are tempted to invest more in the stock, more in the some of the securities where it is having highest risk. And if you see the senior citizens, generally they opt to say invest in the fixed deposits or the post office, so that they can't afford to lose the capital. They are okay with receiving minimum interest rate, but they can't afford to lose the capital at the later stage. Investment portfolio should be diversification. Okay, so there is a concept of liquid funds, fixed funds, and all these things. And that even if you are investing in the stock market or anywhere, there should be a diversification to mitigate the risk, so that the entire amount will not be lost at a single stretch. There should be the diversification should help you in the risk taking, like investing in the government bonds, a few percent, certain percentage of the same, and particularly in the equity and debt, all these things. Effective utilization of the funds will actually help you to earn better compared to the highest risk taking, because if you take the risk, there is a possibility of getting the highest interest, highest rate of 20% or doubling the same amount. The same time, there is an equal risk of losing the entire capital also. If you have the diversification, definitely it will help you to mitigate the risk. I will never say that the risk will be exhausted or it will be vanished, but it can be reduced. Hope I am not very fast.
It's fine, ma'am. Please carry on. That will give us some
Thank
more
you, sir.
time to discuss. Yeah.
Sure, sure. Thank you, sir.
Right.
There are some misconceptions regarding the financial planning is concerned. The people at the younger age will feel that financial planning is something which you need to think of at the early mid 40s or mid 50s. That is not the case. If you are able to start it at the early age, there is a chance of getting a more coverage for your personal insurance or the term insurance or the insurance coverages, and there is a concept, there is a possibility of saving more, so that the contingencies And you can, why can't you think that if you can start saving something at the early age, there is a possibility of getting retired at the early age and do something of your passion instead of doing something for money. End of the day, there is no guarantee that everyone is working only for money. There is something beyond that is called passion, which drives you to work even at the age of 70 or 80 if you have that passion. So there is a thin line of difference between the requirement and the passion. The passion drives you to the next level. That can happen only if you have the enough savings with you by 50s or something. You can start, if you are good enough to plan it well ahead, even in the 45s also, you can have the enough savings and the income in place, and you can start your own passion with your own ventures and everything, and you can explore new things, which will actually help you to make you mentally happy compared to other things. Financial planning is not just investing something and keep you say keep, I have kept something in the stock market, I have kept something in the gold, I have kept something in the land. This is not just that is not financial planning. The personal finances will actually help you to gain something more and beyond, will help you to get the financial planning better. And you should appreciate that it is not a one time activity, it is a repeated activity, and it should be a continuous process, because once you complete the short term goal, automatically a new goal will come into picture. Say today you want to go visit some particular place, say XYZ. Tomorrow once you complete that XYZ, automatically ABC will come into picture. There is no end to the human needs, and there is no end to the human desires also. So it all depends on how you plan your things ahead. It can help you to go to the actual situations. Financial planning is not one of the thing which can help you for the emergency fund creation. It can be short term, medium term, or long term. As we discussed in the earlier slides, there is no guarantee for the employment and no guarantee for the income, and you should ensure at least 3 to 6 months of the income, monthly income as your emergency fund creation. There is a concept of short term that should be a liquid item. Liquid assets is the one which can be converted into cash immediately. Say suppose you have invested in the land or in the gold, it is not a liquid asset, because if something happens and you have to pay some to someone immediately, it should be in the liquid form. It can be either in the bank accounts. The FDs also can be nowadays can be cancelled online and can be paid immediately. Earlier, we are required to go to the banks and have to get that done. It is a long process. Nowadays, you can use your mobile using the internet banking. You can do it on your own. So there is no minimum amount or maximum amount to start savings. Say, let's start the SIPs in the mutual funds with as low as 500 rupees or even 1500 rupees a month. You can save a part of your savings into the savings is the one which is the income minus expenses, right? So that minimum amount you can start the SIPs at the early stage, which can help you to double it or triplicate it at a future point of line. And the same can be used in investing in some other organization, or even the same can be used down the line. Once you cross a particular age, you want to start your own ventures. The same amount can be used by you as your personal investment in your own ventures. So there, some people will get some people might have the feel some people might think that there is no difference much between the financial planning and the tax planning. Both are different. The financial planning which actually helps you to create more wealth for your future needs, and also it helps you for the future requirements. Financial planning is the thing which can be done irrespective of the taxation concept, right? So the amount which is left over after all the tax payments and everything is the amount which is available for you for the savings. The same can be used for the long term, short term, or the medium term requirements, and then can actually help you into the future requirement goals. and it will actually in turn help the standard of living and a better wealth management and the wealth creation also. Whereas the tax planning is the one which will be used to minimize the taxes. There is no, you can minimize the taxes by using the legal means, but not avoidance of the taxes. Nowadays, the income tax department is so stringent and are using the artificial AI concepts like anything. And even if you feel that you have concealed something, it is being captured in the AIS annual information summary report and even the form 26 AS and everything. As the department is opening the income tax assessments of as long as past as 2015 16 or 16 17 assessment years also nowadays to add back the incomes, and there will be huge penalties once they find out that you have hide something while filing the tax returns. So it is not advisable and not recommended to conceal the income and to escape the taxes. Once you pay the taxes, you will be freely, happily use the say balance amount for your own choice, and it will not have any tensions at all. It will actually reduce the tensions on your part. To invest in the tax-free returns, there are certain in tax-free returns like the PPF and the gold schemes. Some of the gold schemes are there where the capital gain amount will be exempted, and there are few other schemes which can actually help you for the tax-free returns. And the other thing, generally what will happen is in the tax planning is concerned, the employer has the responsibility to deduct the tax on a monthly intervals, regularly. However, if there are any personal income, it is the responsibility of the SSC to deposit towards advance tax on a quarterly basis by considering the other income apart from the salary income. If there is any change in the employment during the year, it is the responsibility of the employee to inform to the employer to consider the past employment income and also to pay the taxes accordingly without any last minute rush or last minute surprises. Generally, what will happen is if there is any change in employment or personal income, the people will think that the department will not know. But the technology has been so advanced that even if you purchase or even if you are receiving the interest income from the post office also, that same is being captured in the AAS. The everything will get added in the last minute when you are filing the tax return, which you didn't expect, and because of it, there will be huge tax liability with interest. And in the last month before the tax filing, you will feel that the entire salary is being paid to the income tax itself. To avoid those things, you should plan your taxes also along with the finances well ahead, which can help you to have a better peace of mind. So, what are the key takeaways from my presentation is to try to start the savings at the early age. As told you, once you become, if you see that today's business line, the NPS is the one of the concept which has been introduced for the minors also in the last budget. So most probably from the next month onwards, the NPS is also available for the minors. So you are all majors, right? So it is a high time for you to start the savings. When the minors itself start savings, why can't the majors start the savings for themselves? Right? And generally, people will, even in the family, will say that you are now a major. You should start some savings for yourself and start some earnings on your own. So let's start it at the early age. Why to start at the age of 27, 30 or something? If you start the savings at the early age, the benefits will be at the faster age. Say examples, if you take any insurance or something, generally it will ask you to pay for 20 years or 25 years. Subsequently, you will get the benefits, right? So if you start at the age of 18 or 20, so by the age of 40, 45, the payment itself is completed so that you will not have the burden of the financial expenditure towards this thing. And already you are being taken care by covering the same. Term insurance, medical insurance, vehicle insurance, everything is must. You have seen the floods these days coming like anything. Unless you have the insurance in place, how will you get the insurance for your vehicles when it is lost? Even if you take the medical insurance also. And we all know that how costly is the medical bills these days. Once you go to the medical, once you join in any hospital, all your savings will be vanished in a second. Invest in the SIPs, mutual funds to diversify the portfolio. You can take the risk at the younger age. I appreciate it. But you should also diversify the portfolio so that you will not end up in losses itself. The power of compounding. If you see the interest, the power of compounding is the interest on interest is required. So if you can find such schemes and such pro portfolios available, you can opt for the same. Don't invest in stocks based on friends' advice. As I mentioned you earlier, even for the financial planning, don't take it something for free. Just because someone has started investing in a particular item or someone is purchasing something, don't go just blindly. It should be customized. His requirements are not your requirement. His goals are not your goals. Right? So everyone is independent and everyone has their own set of priorities. Use your credit cards wisely and don't convert the CC bills with EMI with interest. Nowadays, what the people will think that let me convert the EMIs, let into EMIs the credit card bills. Just purchase me. Let me see when something comes up, then I will pay up. That will not be the case. You should ensure you have proper savings in place, and you should also think double check whether you actually required it or not. If you actually required it, you can purchase it, not a problem. You can purchase a credit card or even on loan or something. But just because someone else has purchased, I should not purchase. His demands or his requirements or his opportunities are different. Everyone is unique. We should not compare ourselves with the others. Why we should need to compare with others? We are blessed with the unique features for ourselves. Reduce the debt unless the revenue generated debt is more than the interest. There is people will think that they have some, say example, the housing loan is there and they have the FDs of 20 lakhs or 30 lakhs in the lying in the bank account. And you are paying around 14% or 13%, at least 4 to 5% over and above the interest which you are going to receive from the bank from the FDs, right? Because that is the margin amount which the banker will take over and above you. And the other thing, if you notice it clearly from the bank interest statement of the EMIs, they will adjust with the interest, not with the principal. The principal amount will be very minimum and the interest will be very huge. So if you are able to repay it at regular intervals and reduce the loans, automatically the number of years can be reduced or even the amount will also be reduced. So if you have something buffer available with you, try to reduce the loans. Don't take loans for the purpose of tax purpose. If you take the housing loan is concerned under the tax new regime is concerned, nothing is available for the deductions. Earlier, few people used to take the housing loans for the purpose of tax. We will get the 2 lakhs reductions. 2 lakh amount reduction is available, right? That is what they think of. But if you see the 2 lakhs breakup, at least 40 to 50%, 30 to 40% is only available for the principal. The balance 70% is interest. So you are actually indirectly helping one person to get employment by paying your interest in the bank. It's indirect employment creation by you. All loans should be less than 40%, 45% of the total revenue generated. Otherwise, the pressure will keep up on you. So don't take huge loans and don't take it unnecessarily unless it is very, very vital for you to grow in your professional capacity or in your personal capacity. I am making the statement. Don't take loans for the purpose of, or purchase something just because the person next to me is having it. He has Mac, I should have the Mac. He has some car, I should have some car. You should never compare yourself. Think that you are unique. You are actually unique. Why do you need to compare? His requirements are different. His priorities are different. Don't take it. The personal loans, where the interest rate is huge, don't take it. It will eat away your liquidity because the amount of the interest which you are going to pay it regularly will be huge compared to the other loans. try to repay the loans at the earliest and ensure the debt is there in your personal portfolio. Even though the interest rate will be, the income or generated of the debt will be less, but it actually ensures something is in place and you will receive it at regular intervals.
Thank you so much, ma'am. I think it was a lovely presentation. As I was just sitting quietly and hearing you, I was wondering that I wish I had listened to this presentation 30 years back. And I think that is true for many of us, you know. I think somewhere in our culture, we are just not used to thinking of the concept of saving. And somewhere in the slide, one of the slides, you made a very interesting point that income minus savings has to be the expenses. I think we think about, or rather, everybody thinks about income minus
Expenses saving.
expense is the savings, right? Now, this is actually a mindset. This is actually a mindset when we say that income minus savings, then whatever is left is the expense. See, in today's scenario, where specifically the young generation, right, they are used for two things. One, essentially, it is it is the parents who are actually taking care of the studies of the children till they are graduating or post graduating. So in that scenario, you really don't think about the value of money. You just think about what you want in life, and most of the parents are there, just ready to make sure that the parents don't feel guilty. Many a times I have seen that parents feel that they should not feel guilty. If the child wants
They
something, you should better give it. You know?
they even provide the things nowadays, even without from the word is coming from the mouth of the children.
Yeah. Okay. And the second thing is this loan culture. Actually, somewhere toward the end of your presentation, you touched upon that. It is very difficult for anybody, not to get swayed in a scenario where there is so much of loan culture and everybody is just willing to give you a loan. And third thing, you're also mentioning that this NPS thing is now going to be allowed for the minors also. Do you think somewhere in the society, maybe driven by the society, there's a major change in mindset is coming that until you actually capture them, influence them at a very young age, it is difficult, very, very difficult to really influence people once they grow beyond the point to bring in the concept of savings. Is there really a major change in the thought process of the government, the policy making, the policymakers? Do you think that kind of a thing is happening today?
If you see, there is already a concept for the girl child is concerned in the Sukanya Samriddhi Yojana. Okay.
Right,
So I think the NPS is open for all the genders, which can help even for the boys also get accustomed into the NPS is what I thought of.
right,
Instead of giving something exclusively for the boys, it is not acceptable in the society. So if you
right,
get some scheme which is open for all the genders, can actually help the boys also at the early age to start some savings for them.
right, right. Also, I think what is happening, I think may not be in a knowingly that we have thought about. On one side, since you are also in the field of sustainability, I think this concept of sustainability, which in our culture had been there traditionally, like if you see when we were young, I think I remember you buy one pencil box in the school in nursery, it goes for next 12 years. You know,
Not
somehow I
only the
think,
same,
yeah,
even for the books of the elders generally used to be used by the youngers. Nowadays, every year new textbooks and new notebooks are coming.
correct. So I think
There is no
somewhere,
concept of reuse, unfortunately, nowadays.
correct. So I think somewhere, maybe for about last 25, 30 years, we missed the bus and we actually got swayed by the Western philosophy that we use it, throw it, buy it, use it, throw it, buy it. But very interestingly, now that concept is coming back, I think there are two things which should actually take us forward. That the concept of savings should actually come from the young generation, from the young days. More the concept of sustainability really comes in and really gets accepted at the household level. It is not just for the corporates, it has to start from our own family, own house. Since we're running out of time, very two questions I just wanted to ask you very quickly. As you rightly say, there is no specific age where we start to save, right? So the sooner we start, the better it is. Correct?
Yes, sir.
The sooner we start, the better it is, right? Now
Yes.
the challenge is that most of us don't think it that way. So the point is that until we really get into a job, and after getting into a job also for a couple of years, we do not think like that. Hopefully things will change fast and the mindset. So I think that's a very society issue, very difficult to do anything, at this stage. But I think the whole concept of personal finance, I think that has to come in a very strong way. What I was reflecting, there's so many of us who are the students of business management, and we do so much for about managing the finance for the corporates. But if you look at managing the finance of our own life, it is actually in a complete mess. You know, so the concept of personal finance, I think, has to be given much more weightage, much more credibility in our whole scheme of things. I think most of us feel that corporate finance is what you should look at. Personal finance is no, it's not that much to be touched upon.
Yes.
And I think there is a need for to really bring in more courses, more programs at much a young age to talk about personal finance.
Unless we think of ourselves first, how can
Right.
we plan something or do for someone else outside? So the
Correct.
planning or the financial planning or the consistency needs to start from ourselves first. Then only the same can be implemented in the corporate at a better stage.
Correct. Correct. Ma'am, I think we are running out of time little bit. So let me just look at the questions, if at all, if they have come in the chat box. Uh, yeah, I think in the chat box, I think Priya ma'am has dropped in the form. So request all participants to look at the form, to click on the form and put your feedbacks on the form in order to make sure that you get the certificates. So while we carry on the discussion, I will also encourage participants in case there are any questions that they have to ask the speaker, you may please drop it in the chat box. We'll love to take it up. While let the questions come in and let the people fill up the forms, let me ask you that in terms of the the health insurance and the medical insurances that we have, in many corporates, they actually provide medical insurance facilities. But do you think that we should also have our own personal medical insurance facility in addition to what the companies provide?
Yes, I will give you an example. Say, let me take
Ah,
my let me take our example. So, I suppose I am working with some XYZ organization. Okay,
right,
and I have the coverage of 10 lakh rupees of the medical
right,
insurance.
right,
So, once I am into the notice period,
right,
automatically the privileges will be reduced. And if there is a gap between my current employment and the joining employment, say by 31st of September, I will be relieved. On November 1st, I am going to join. There is a gap of 1 month, under which I will not be covered under any medical insurance. Unfortunately, if something happens during that period, even for me
okay,
or for my family, who will be taken care?
okay,
My next medical insurance will come with the new employer from October 1st onwards. Sorry,
right,
no, from November 1st onwards, right?
correct,
And there is a gap between the two. There will not be any overlap. Generally, there will be a gap. So if something happens, who will take the responsibility? The entire savings will gone in a split
right,
second. And we can't guarantee that there will not be anything happen. Fortunately, with God's word, no one should get anything. But
true,
nothing
true,
is in our hands. So if we have our personal medical insurance in place, even if something happens,
right,
the minimum coverage at least needs to be taken care. Then
right,
and 10 lakhs and 50 lakhs are nothing once you join any hospital.
true. Just tell
You
me
will end
also
up
one
paying at
thing.
least 20 to
Yeah,
30 lakhs out to come out if something
right.
serious happens.
True, true, absolutely. In this context, just wanted to ask you that if the company has a medical insurance for me, and I also have my personal medical insurance, and if something happens to me, can I take advantage of both the policies at the same time? Is it possible?
The limits, there will be limitations on the same. Okay, so
Okay.
generally, if you take any part of something or something, then automatically it will have the coverage. It will depends upon the nature. That's what we should be. We should be careful in selecting the medical insurance policies, the terms and conditions. All these things
Okay.
needs to be taken care. So we should ensure that the policy which we take should
Right.
have the facility of top up at the last minute also to cover the entire things.
Okay. Okay.
That is where our financial planning comes into picture.
Right. Right. I request all the
Even
participants to click
yes.
on the form and fill up the forms. I think we are running out of time. Ma'am, one more question to ask you. In terms of the term insurance, while there are so many other mechanisms, so many other schemes are there, but is there any specific benefit to go for the term insurances?
The term insurance is not for the person who is taking the same. It is for the family who is dependent on you, or even if it
Okay.
is not dependent on you. So if something happens to the person who
Okay.
has taken the insurance, that
Okay.
family should be taken care of, because there is no guarantee that you should be on employment when something happens. That's the same in the case of the medical insurance only. Okay.
Right.
So if
Right.
something
Right.
happens, if we take at least 2 to 3 crores of rupees of term insurance, the family will be secured,
Right. True.
and
True.
you will change the countries like anything, and you will not have the social security in all the countries where you are working. If you are working for a short term employment, the social security will may not be covering everything on for you. So if something happens, your family should be safe, and the it should have the minimum assurance or minimum guarantee to have a decent lifestyle.
True. True.
For that
Exactly.
purpose, the term insurance is required, not that the medical insurance and other things are already in place.
Right. Right.
It is for the family, not for us.
Not
If
for
you
the
take the
family.
term insurance at the early stage itself, automatically the premium amount will be reduced compared to when you take it at the 30s or 40s.
Okay.
To get
Okay.
the maximum benefit out of the same, you should start it at the early age.
Okay. Okay. Last and final question from my side. Is there any cap on the maximum saving that one can do in a particular month or a year?
It all depends upon your income and the expenses you are
Okay.
planning to do.
Okay. I mean, suppose if I
You can
earn,
you can save the entire income if you have someone to
yeah,
take care of your expenses.
correct. Okay. So there is no cap as such. I mean, there is no
No.
cap as such. Okay. Okay. Good. I suppose
Do
there
we
is
have
no
any
other.
questions from the audience or
I don't find
participants?
anything on the chat box. Anything else? Priya ma'am, I don't find any questions here. Is there something with you can share with us?
Uh, Nothing, sir. Thank you so much, sir.
Thank you. Thank you. While
If you
ma'am,
have any
well,
questions, you can drop
uh,
us so that we can revert back at the earliest.
correct, correct, absolutely. So I think
Sir,
with
how
that,
do you think about the
uh,
finances as per your personal view?
ma'am, what we say, what you preach is what should be done. But I think for most of us, what we really do is totally contrary to what should be done. And I
That's
think
why we
that
should not compare ourselves with others.
yes, yes, we
We are
should not
unique.
compare ourselves with others. We should focus, we should understand, where we are, and we should save for tomorrow. I mean, today it might be all very good for me, but tomorrow you don't know, like what is there in future, you know. So I think the self-discipline, really looking at, not splurging money, you know. So all the issues of the young generation of this culture that we have got for the last 30 years, I think we need to forget this 30 years and go back to our roots, go back to our past. I think then life becomes much more sensible. And then the concept of the savings and all these things really come up, for taking care of our family and ourselves. Thank you so much, ma'am. It was really lovely to talk with you and know from you and learn from you exactly the do's and don'ts and the mechanisms for savings, for finance, for our personal life. With that, I also would love to thank the participants. I would love to thank Mr. Sudhir Sharma, the president of AIMS. I want to thank all the board members of AIMS and also the AIMS Secretariat who have extended solid support, who have worked so tirelessly, I think, behind the screen to make sure that this program should have been there today and went off such beautifully and without any flaw. And finally, thanks to all the participants who joined and to hear the speaker presenting. And thank you, ma'am, finally for taking up your time and making sure that you share your knowledge with us. And thank you so much. Priya,
Thank
ma'am,
you,
with
everyone.
that, I pass it on to you.
Thank you, sir. Thank you, ma'am. It was a
Thank you.
Thank you,
wonderful
everyone,
session.
for
Thank you.
joining, and thank you, Ames, for the opportunity.
Sure.
Thank you, sir.
Thank you.
Thank you. Thank you. I think we all can leave now. I think the program has come to an end. Thank you
Yes.
so much.
Thank you.